this is big. This is big for corporate India, for Indian stock markets, and for long-term investors. The government has decided to really reboot the taxation system at a time when expectations were least and expectations were limited. In order to drive the broken down capex sector, capex in India, and revive the manufacturing cycle, the government of India, the finance minister, has announced a big tax cut for the manufacturing sector. A tax cut means companies will have more cash, they will have more profits, and they will have ability to spend. When cash in the system goes higher, that automatically will have an impact on the cycle, and it will have a recovery on the way how the manufacturing sector is moving. So Mr. Anil Agarwal now joins us, needs no introduction. He is chairman of the Vedanta Group. Mr. Agarwal, Nikunj Dalmia from the Mumbai studio. Is my voice reaching you?
Yes, very much.
Okay, this has come as a big surprise and a very big surprise. Your first reaction?
There cannot be better day for India than what has happened today. Cannot be better day than for India than what has happened. It's amazing what a bold move by Sitharaman and Modi government. You have brought the tax level on the world level, and why they are all on the top of it, incentive for the new industry. This will give, I think, boost to the sentiment. Also, one big thing which I've been thinking all the time, still the government fundamental backbone is the public sector bank. They have to do the same thing to bring down their holding 50%. The entire thing will change. The control from the bureaucracy, from the government will come down. 3 times production will increase. The economy will double. If they can bring down their holding in all public sectors, including the bank, by 50%.
Mr. Agarwal, what is your understanding of lower tax rate and higher capex? Do you think corporate India will now finally come out and they will start spending?
You know, in the world, if you see today's FT headline, is that there's so much of pile-up of the fund available that the treasury people of the corporate don't know what to do with the fund. And it is a fantastic chance for India to attract that money. You see the FT, what it says. The corporates are miserable to hold the fund at the 0 interest rate or the minus interest rate. And India, we need a pumping of this treasury. And cannot be, when you bring in this level of tax, definitely no question the attraction will come. But still again I'm saying India fundamental,
Can I say this is a game-changing move by the government in order to revive the economy? Can I use the word game-changing?
This is definitely a game changer. This is definitely a game changer. I congratulate Narendra Modi, Amit Shah, Sitharaman, what they have done. Nowhere in the world this bold move has happened. But again, I'm saying public sector bank, reduce the holding of government to the 50%. See what happened. India will be a very different level.
R.C. Bhargav also joins us. Mr. Bhargav, let's capture your assessment with the zing in your voice. Do you think this is a game-changing move for the manufacturing sector, and now this will really kickstart the broken down capex cycle?
No, it certainly makes manufacturing a very high priority activity for investors. And what the government has done is a very major step, a very major change, which suddenly focuses on the importance of manufacturing and focuses on making manufacturing a very attractive avenue for investment. And ultimately, what you want is a lot more new investment. And what they have said about taxation on new companies coming in, I think is a very innovative and an extremely important step.
Your understanding, Mr. Bhargav, do you think now capex will start? I mean, Maruti never stopped capex because rates were high, but would you increase your capex at a time when slowdown is real? Because yes, it makes sense for you to increase capex, but demand is not there for autos.
No, we were not impacting our capex in any way with the slowdown. That was not coming into play at all because we don't expect the slowdown to last for too long.
Mr. Agrawal, could you broadly tell us that what will happen to your effective tax rates? I know I'm asking you to, give me exact numbers, but would you have those numbers handy for Vedanta?
Yeah, like Hindustan things, we have a corporate tax about, I'm just assuming about 35%, which will come down to 21%. We'll have a more cash with us to reinvest. Again, this is another sector what you touch, Vedanta. Vedanta is the highest taxpayer in the past, in the present. 2 lakh crore tax has been paid by Vedanta in last 5 years. So this is the, again, very boost to our mining industry below the ground. Whether it is oil and gas, whether it is gold, copper, zinc, iron ore, and this will definitely boost to our industry.
Mr. Agrawal, what is your understanding about this tax also, this reduction in tax rate increasing India's competitiveness? Because you are in a global business. You have to take a world view. You have to, as an entrepreneur, look at where your return on capital is very high. And entrepreneurs in India, and especially mining companies, have been forced to look outside because Indian tax rates were high. Will that change now?
Yeah, see, this mood is changing. Still, the numbers are not coming. Today, we still import $300-400 billion of worth of all the mining and the natural resource. It has to come down. India has a tremendous geology, and government is now slowly turning from the revenue mindset to the production mindset, and which is very important. And keep the orders also very simple. There's normally the notification, whatever used to come, used to be very complicated, and they are keeping it simple. This whole thing nothing will happen in overnight. But as I'm saying, the other side, enough capital, other side, enough money, resources are available. Other side of the bridge, we are standing in India where we need these resources, we need this fund. And probably what government is doing to creating a bridge. But it's still the government economy depend on the government companies and the government banks. It has to be hammered one shot, not slowly.
Mr. Agrawal, so I'm again, asking you perhaps a question, but at the risk of repeating myself, let's say you were working with a capex number till yesterday.
Yes.
Now the tax rates have come down. What will you do? Increase your capex number, or whatever savings you will have, you will keep it in your balance sheet?
No, I think in our sector, definitely is a lot of room to develop the business. We have always been very aggressive in the capex because huge demand and huge resources. But because of the government rules and regulations, we have been going slow. But I can see the government move. But this money which will come, we have not calculated, but the mood will change. When we will be discussing in our exco, earlier we were very, very cautious. If you want to spend 100, we will spend 80. But with this mood, I think the mood will change. Apart from us, I think what we are looking fundamentally, the middle MSM, the middle level companies to come up, and their mood has to be very positive.
Mr. Agrawal, I'll not take much of your time. Just one last follow-up question. If we discuss, the honest feedback from the industry was that cut tax rates, simplify, and demand and economy will revive. Tax rates have been brought down. When do you think the economy will revive?
No, the burner is on. The cooking time will take. Cooking time, whatever cooking time is, will take. But at least the mood is there. People can see and believe that something is happening, and India is a very entrepreneurial country. So these things will help. Nothing is going to have overnight, but you see how the market has reacted. In 1 second, the market has moved up 1,000 point. So this is India. So the thing, people will be very optimistic, but nothing will happen overnight. Give them a time, but I'm very, very hopeful things will be very different going forward.
Appreciate your time. You accommodated the interview request in the last minute. All right, guys, if you are on Dalal Street, it's early Diwali party for you today. Indian markets perhaps have registered their biggest single day gain in many months now. What we reported on Tuesday was gloom and doom because of oil. Well, today it's all about steep rise. Is this the turn? Is this a big turn for Indian markets? That's the question I'm going to throw it at Sunil, Sanjay and Ajay Srivastava. Sunil, you're about to board, so I'll ask you first. Is this a big turn from a sentiment and from a market standpoint? Is the government direction today in a tax cut, by cutting tax rate, a clear signal that they are now doing whatever it takes to revive the economy?
I think there is no doubt about it, So these are much more than what any of the most optimistic person would have expected as far as India is concerned. I think it's a big step towards reviving manufacturing, particularly because of the additional benefits of manufacturing and overall sentiment. I think what we were seeing was sentiments were, constantly sort of ebbing. And this one step just roars the sentiments back into action. It also clearly indicates that the government is, willing to forego some tax revenue, maybe forego a little bit of fiscal prudence, but ensure that the economy comes back onto that 7-8% growth track. So I think it's like a AAA or a hats off kind of an announcement from the government.
Markets have reacted today. Do you think now the next move will only come once earnings and evidence comes out, or markets now have come out of this so-called bearish grip finally? Sanjay?
Yeah, sorry, I couldn't hear you. If I understood, you're saying that markets come out of the bearish group, right?
Sanjay, would you like to respond?
Yeah, I think it's a real sentiment booster. More than anything else, I think what the message the government is sending from here, that India is actually open to feedback. India is actually open to become a globally competitive market. I just did a quick check, and just to put some numbers in perspective, and sound really realistic on this. What the impact of what government has done. Countries like Germany is at 30% in corporate tax rate. New Zealand is at 28%. Brazil at 34%. China at 25%. At 26.5%. So, India coming to this particular level of corporate tax means a lot. It means a lot in a global perspective, more than what, the calculations would be for the short term and how the sentiment revives here. So it really sends a message across to the world, and more so when Prime Minister Modi is going to be in the U.S., that India is actually open for business, India is actually open for feedback and change. I think there's a very important message that's going out to the global community more than the investment community and the industrial community here, business community here in India.
Ajay, is this the turning point for the markets, Ajay Srivastava?
I think so. I think it's a turning point, not because of tax cut, but because the doctrinal shift in the understanding of the government in the policy. And I think the more will come. I think the market will revive much more if we can find some more answers that in the current year, will they cut back some of the expenditures on the social side at this point of time, or will it be just a bare excess of 1 lakh crore, or will this be funded by PSU sale? I think that's a key issue. The next follow-up will come from what is the plan to bridge this gap of 1 lakh crore. Expectation is buoyancy will bring the revenue, but that won't happen in the current year. So if this is followed up with the sale of PSU, a strategic sale of PSU, I think that will change the market dynamics altogether. Today is relief, tomorrow will be rejoice.
Giving it a thumbs up, corporate India is giving it a thumbs up, but Dinesh Kanabar always has his magnifying glass on, and before we start celebrating, he starts commenting on the fine print. Dinesh, over to you. Is the fine print looking as real as what markets are making it?
Well, what we do have at this point of time is the press note and not the fine print, but it really looks very, very good. And let me give you a perspective. There was a criticism of the government that while 5 years back we looked at a tax rate of 25%, it wasn't happening. Today we are talking of a tax rate of 20%, effectively going to 22%, and then 15% for manufacturing companies. Now, this is much, much better than what was ever on the table. More important, I think the reduction in MAT is very, very welcome. I think it could have gone down a little bit more, but I think it's 15% is very, very welcome. And then the fact that the increased surcharge really has been taken away from equity market and where you are paying securities transaction tax is welcome. Probably one thing, which the finance minister may have considered, is to do away with the surcharge, increase surcharge altogether. There is no point in saying that those who work very hard and earn money have to pay a higher surcharge, whereas those who make money on equities will not. But overall, I would be very, very positive. Also, the way I look at it, for example, on the CSR, where on the one hand we were looking at criminalization if you did not spend money, we are now going to say that you can spend the money not merely on CSR activity but also on R&D activity. All very, very positive.
Okay. Fair point. Okay, Sunil, the pattern in the market has been that mega caps like Bajaj Finance, Asian Paints, some of the mega caps where earning visibility has been there, they were outperforming because markets were not optimistic about recovery in investment stroke capex cycle. Will the pattern in the market change now, Sunil? I mean, in terms of an allocation, ascending, descending order of gainers and losers in coming days and months?
So, Nikunj, if you see the movement of the market over the last so many years, what typically happens is that when investors are not very confident about the other parts of the economy, money flows into so-called defenses where earnings are assured or sort of very stable. And the moment the risk appetite returns, I think money shifts back into stocks which can, or companies which can benefit out of the recovery in the economy. So I think there will be definitely some reallocation. What this step also does is it opens up expectations of many more steps from the government, because this was a big step. Maybe, some scrappage policy or some more policy about encouraging investments, into manufacturing by way of other incentives would also open up. So I definitely believe that, money will flow into so-called stocks which can benefit out of likely growth. Obviously, the initial beneficiaries would be companies which are paying full tax, and for them it would be a straight 10% increase in net profit. Nikunj, what it also does is that it increases the earnings expectations, and therefore the PE will always, will start to look much more lower than what it is today. Maybe a 5-6% increase in overall earnings for the Nifty because of the tax cut is definitely on the cards, and that would mean that the PE, which is 17, will start to look at 16, and with major imputers. So I think overall the markets itself should attract a lot of interest. And there is a lot of money waiting on the sidelines. When I meet investors, they were all waiting for a trigger to enter the market. I think this is a trigger. So you will have a follow-on buying from local investors, obviously from global investors too, but local investors who are waiting on the sideline should start to now get encouraged to look at the equity markets with a very positive bias.
Piramal of the Piramal group would also be joining us. Is he there with us? Okay, he would be joining us. So Sanjay, what Sunil is saying perhaps is important, that the complexion of the market now changes. The comfort zone and the mad PE multiple what some of the mega caps are commanding, that will start coming down. Are we looking at this change now, Sanjay, or it's too early to comment on that?
No, I think the most important thing what Sunil correctly said was that people were looking for a trigger. People were looking for something to change the mood. Most savvy investors, in fact, 99% of the savvy investors knew what to buy, knew the prices had come, but they really couldn't figure out as to what would be the trigger to reverse the negative sentiment, reverse the bear onslaught that we were all experiencing. So what clearly comes across now is that this is the trigger, and more importantly, that such a radical step, which is I don't think I can look back outside of the budget or outside of a event the government has taken in many decades, if you look back. So it clearly sends a message, as I said earlier also, that the government is now serious about this stuff. Government is serious about setting right the problems, setting right the sentiment more than the issues. Like Sunil correctly said, the earnings multiple might drop from 17 to 16, but more than the earnings multiple, the so-called cliched word of animal spirits, that's what I think will come back now, and people will start to take risk in the equity markets. Obviously, the actual impact on manufacturing, those kind of things will take time, but sentiment will change.
Ajay, I'm coming back to you with a follow-up question, but Dinesh, what is your understanding of a direct correlation between a big tax cut and spending? On paper, this is great, but an entrepreneur will only spend when he sees demand. You always create capacity on the prospects of demand, and that's where the problem is, Dinesh. Okay, I think Mr. Kanabar is not there. Ajay Shrivastava? The
Yes,
same
sir.
question.
No, I think, see, demand is a function of your perception of your future. I think one of the perception has been that at least the consuming public in India which invest in the market also has a wealth impact. It goes into your purchasing power. Now, when you go into Diwali, you feel a lot better with some of the portfolios looking better. You'll tend maybe spend 5% more, 10% more. But you'll definitely spend compared to hold earlier. So I think, apart from direct linkage, it's a psychological linkage to your well-being, to your purchasing. And I think that's a good part. It's timed extremely well in terms of the festive season. And I think government was realizing things are going bad. But, most interesting is, this is amazing. The RBI governor comes and says yesterday, I don't think there is a room for fiscal stimulus. Next morning, the finance minister announces the biggest fiscal stimulus, I think, since 2008. Wow, that's some coordination, is it? But anyway, I'm not quibbling. I'm enjoying it. It's good. And I think the follow-up is more important because this whole of 1.5 lakh crores need to be filled up by something or somewhere. Buoyancy alone will not give you this money in the immediate future year, 18 months or 24 months. So let's see where the cuts are going to come, or will it be revenue generation from the sale of PSU? There is only two ways. You cut expenses or you sell your PSU. But if none of them happens, then you're asking for deeper trouble in terms of your bond yields and bond rates. Because if you're going to fund this by increasing government borrowings, then half the benefit will be negated in a very short while. So let's enjoy it, but caution is where the 1.5 lakh crore hole is going to be filled up from. If it's more borrowing by the government, I think then we perhaps will be a little more chastened lot 30 days from now.
Sanjay, today we are talking about tax cut, but tomorrow or Monday morning when markets will open, will we start getting worried about oil once again?
See, Nikunj, what I said that the real worries don't go away. But what Ajay and Sunil have correctly pointed out, Ajay specifically, that the feel good is coming back. The consumer will spend. This 1,40,000 crores odd impact on the fisc, I think it will be easily made up from aggressive divestments, privatization, whatever you may call it. But it's important that those are executed. So, of course, these realities will hit the street on Monday. But markets were oversold. So the extreme oversold position, the extreme negativity would correct. And we would start to trade at more realistic levels and things would stabilize. The euphoria of today would settle down. But I think most important out of these, more than the 1,40,000 crores of benefit that will go down to the economy, whether in terms of tax cuts or consumer spend or whatever, however it translates.
Joins us now. Ms. Goel, good morning, good afternoon rather, and thank you for joining us. It's a very strong statement by the government that they want to kickstart the manufacturing cycle and the broken down capex wheel. But do you think this could come at a cost of fiscal deficit?
Well, I think that if there is a rise in growth as companies start investing and more companies enter, it will make up some taxes are much higher when growth rises. One reason we've seen for the shortfall in taxes is the low growth over the last year. Yeah. And of course, the immediate, so therefore this, and then you're competitive with East Asian economies, you're simplifying taxes, you're giving companies a choice. So there are a lot of good features here. And yes, hello?
Ma'am, please go ahead. Ms. Goel, we can hear you.
Yes. Yeah, so immediate on the fiscal deficit, they are continually announcing a series of reforms, and they're very serious about divestment. So I think the next announcement we could hear maybe on some big public sector company. They've been identifying what they can do in this field for the long term. That will help them to recoup some of the taxes they've given away in this.
Ms. Goel, what is your understanding of how soon do you think lower monetary transmission, which is now happening, that's one end where government is trying to bring efficiency back, and tax rate, they both effectively will translate into on-ground activity?
I think that liquidity has gone into surplus since July, and there is some pass-through. And now with linking, I think bank interest rates are going to be reset soon on new loans especially. banks are being pushed after the recap. Many banks have surplus liquidity now, and they've been told to aggressively look for customers. All this should put money in the ground in the festival, and people like to spend. So we should see a major complaint was there's no cash in markets, there's no liquidity. Now, I think that as well as the sentiments, if there's a turnaround, we can see things improve quite quickly on the festival season. We should see things getting better. But it is very important that banks are told that they must look at the credit risk carefully while giving loans.
Just one more follow-up question, and just slightly away from the subject, which is that the movement in crude has been nothing short of extraordinary. Whatever good work you think is happening by the government and by the administration, do you think the spike in crude could just challenge everything down?
No, I think we've seen the Saudis reacting pretty quickly. They've said that they will make it up with the stocks, and they are working to resume production quickly. And India already has enough stocks for the present. I don't think this volatility will last very long. Because now the oil market is such a large number of players, and there are others who can substitute when any one is affected. One player does not dominate the supply any longer.
Because US has surplus, Russia has a market share. Ms. Goyal, really appreciate your time, and I'm really glad and thankful that you were able to accommodate this interview request. Markets, meanwhile, like I said, this is the biggest single day gain for Nifty since September 2013. So I have to take the clock back to at least 5 years, 6 years now, 6 years ago, when we had this entire twin deficit crisis. That was the time when markets bottomed out, and then we've never seen those levels in mid and small cap stocks after that. Ajay, what a coincidence. When markets bottomed out 6 years ago, exactly 6 years ago, that time there were macro concerns, there was economic concerns, the government was able to fix it, and there's been no looking back. History may not repeat itself, but in this case, could it be rhyming?
Well, I'm sure some neurology expert must be making good money and saying, look at the neurological compulsions of the market. So, well, it's good. I think it's very also important. Can I say something? While we are very exuberant and all, it's also important to temper it down to see that the net impact on these balance sheets of companies, apart from psychological impact and the directional impact, is going to be 10% of the net profits of the company. So when we are looking at share prices, etc., one is, of course, the short covering in the market, which has happened because nearly everybody was by and large short. But we need to temper it down to say that what the results of September 30th might throw a few wrenches in this whole share prices of most of the companies. So let's celebrate euphoria, but a little bit of tempering to say that the first flush is over. I think there should be some follow-up buying coming in with your FIs in the second half. I think that should see some more leg up to the market. But then thereafter, we should need to just take...
I'll have to interrupt you there. Mr. Amitabh Kant of Niti Aayog also joins us. Mr. Kant, the Niti Aayog has been making a case that tax rates, simplify them, bring them down. Tax rates, simplify them, bring them down. Now tax rates have been brought down, simplification is there. When do you think economic growth will come back?
Well, I think it's firstly, let me compliment the Finance Minister. This is a brilliant move. This, to my mind, is the way to go forward. This will have a huge impact on manufacturing, and this is a move for easiness, for simplification, for taxation, and I think this is the best possible move to push manufacturing in India and to revive the animals of India. Now, I think the measures that announced in the private sector to get into this has a little bit of this there. And I think we should not rush up into saying that it should happen immediately. But I think these are all measures in the right direction to establish that the government is fully committed, government is fully determined to take India back to a trajectory growth rate.
Whereas, these steps are clearly in the right direction, but have they come too late? Do you think the damage has been done and the recovery will be slightly prolonged one?
No, nothing is too late. This is just the right time. I think very good progressive moves have been made. This is the fourth economic booster. Both RBI and government have worked together. RBI has brought down the repo rate by about 110 basic points. And the government has more than matched RBI in some very, very progressive moves. And I think all this will give results in the days to come.
What is your understanding of how effective tax rates in the past have worked at different geographies? I mean, tax rates and interest rates currently are low globally also, but they've not really kickstarted an economic boom in China or Europe or for that matter America.
No, but in India, the challenge was our FDI has been very buoyant. The challenge for India was to revive the animal spirits of the domestic companies. So this will give a huge thrust to domestic manufacturing and will enable the private sector, which was sitting on liquidity, to go in for big investments within India. And I think that is the right move. This is the perfect move. And this talk about that India is high-tax economy, etc., all this goes away. What it establishes is government's determination to take India in the right direction.
Okay, so I appreciate your time. Thank you for joining us. That was Amitabh Kant, CEO of Niti Aayog. Another special guest, Mr. Ajay Piramal himself of Piramal Group joined us now. Mr. Piramal, how would you describe today's announcement? Good, very good, or game-changing?
I think this is it's an extraordinarily good announcement today. This is the sort of big bang reform that we were asking for, and I'm glad that this has been done. It sends a very positive signal. This is the most positive signal that the government is giving and the finance minister is giving, that they are aware of the challenges that are in the economy and they want to revive, as they say, the animal spirit. So I think it's a very positive. In addition to all that else has been announced since the budget, this will be a good thing. It will encourage, I think, the FIIs who are actually running away from the country, it'll allow them to come in and invest more now.
The Piramal Group also has manufacturing activity.
Yeah.
Where tax rates were different. Now, given that you were working with a certain number of capex till yesterday, now the tax rates have come out, would you be looking at spending more in your manufacturing business?
Yeah, so definitely we will be doing that now, because if we find that the tax rates are at this level, we were till now in our manufacturing companies paying full tax rates. Now they have come down, and this extra whatever is saved will be reinvested to add capacity, to give jobs. And even in Piramal Enterprises, which we are at the highest rate of tax, which was again mainly in the financial services sector, we find that there will be a good positive impact because of this.
So do you think India Inc., which up until now was feeling slightly boxed because of high tax rates, slowdown, high interest rates, now there could be a complete reboot there? I mean, the word animal spirits or the fact that risk taking, which has been missing, will come back?
Yes, I think so. This is a very, as I said, a very step in the right direction. It's a positive step. People will feel reassured. I think what's also as important as the tax rate coming down is the fact that the government has heard the pains of the industry and is responding.
So what do you think is the bad news here? I mean, what do you think needs to be addressed and has not been addressed so far in the 4 announcements which have come out, 4 meetings which have come out?
You know, I think we should look at the good news. Frankly, I did not expect this to happen. And even the announcements till now, they were small, marginal improvements. This is really the big bang reform that we were talking about. This is a good thing, and I think we should celebrate that rather than worrying about the bad news.
What is your understanding, Mr. Piramal? How soon do you think on-ground activity will start improving? I mean, we are freely using the word slowdown. Do you think 6 months from now we would be using the word recovery and repair?
I think so. So what I think will happen because of this, first of all, companies will have more surplus left into their balance sheets to invest into new capacity. I think this will also make India once again a very attractive destination for foreign capital, both FIIs as well as long-term capital. And please recognize that globally there is a slowdown. Globally the interest rates have come down. You can see that every time the Fed is also reducing rates. Therefore, more and more savings can come into India from international sources. So I think it's this way. We have to just continue like this now.
Just one more follow-up question. What we understand according to our numbers that the effective tax rate now is fairly globally competitive. So can I say this entire concern which many market men have voiced and industrialists have voiced at least on ET now is that India is not tax effective as per the new trade war regime and the global regime. You think that concern will also go away?
Yeah, now we are much more competitive compared to the US. We are competitive relative to US and UK. So I think this is the step, as I said, in the right direction. So this will also make our capital investments more efficient in the long term.
I'm so thankful that you accommodated this interview request. It was late minute, but yet you managed to find time for the channel and to discuss your thoughts with us. Appreciate that. All right, now before we take a break, I have to go back to markets and talk about what's going on. And it's turning out to be like a picture-perfect day for the bulls. Early Diwali, early Christmas, early Dussehra. Also a party on Dalal Street. It's a party on Dalal Street. Bulls are in an enviable position right now, a spot which they have not enjoyed in a long, long time. Is it short covering? Maybe yes. Is there renewed vigor by institutional investors? It's too early to say that, but I definitely feel that the kind of force and the real stigma with which bulls today have made a comeback, I guess that brute force of bull comeback is here to stay. These are record gains on the screen now for HDFC Bank, which is a very large dominated, very large institutional dominated stock. Eicher Motor, Jayesh just told me that it was up 20% because the effective tax rate is high. Maruti, 10% higher. But is this part A, which is that there is one more press conference which is happening in the evening after the GST Council meeting. Are we in for more from them? Is something coming for autos? So I think that is something which we need to focus on. But for the moment, I'll tell you what, we'll take a break with the news that as of now, it is a sea of green, at least on Dalal Street.